Hi everyone, this is Rob Roy and welcome to the LA Wave Options S&P 500 US market update. Alright, y'all been having fun posting that I look like Chuck Norris to the point where somebody actually sent me a Walker Texas Rangers hat. So I figured, alright, I'll play along. I'm a good sport. But let's get serious now and take a look at the charts. So the markets are a little bit conflicted right now, in all honesty, as far as whether the next short-term move is to the upside or the downside. So I thought I'd give you arguments both ways. If you're bullish or wanting the market to go higher, you'll like the chart on the screen. This is from Investors Intelligence. They do a weekly survey of investment advisors where they contact them to find out if they are currently bullish or bearish. And if the reading of bullish advisors drops below 35%, that's viewed as a low number of bullish advisors, which from a contrarian standpoint is viewed to be bullish for the market. Small number of people bullish, market tends to go the other way of what the majority of people think. So low number of bullish people, market tends to go higher. You can see we drop below that level, then we had the big rally last week and we're back above that magical 35% level with the 27 March survey showing a reading of 38.24 of bullish advisors. For a little bit of history, if you remember, the market bottomed back on December 24th of 2018, and that's the last time this survey of bullish advisors got below that 35% level, and then we had the big rally from there. So is that going to repeat itself? Well, we'll see. If you're bearish, you've got something to hang your hat on as well, and that's the Gravestone Doji, which occurred on Friday. Now, we've talked about this in the previous recordings, that we had the extended C wave of the zigzag pattern, and if we're going to go all the way down to the 261.8% fib extension level, Fibonacci rules state that you test the previous fib level first, and then you go to the downside. So the 100% is the previous major fib level, which we tested on Thursday. Friday, we hit it again on the high, and then we close with that Gravestone Doji. So we open lower, traded to the upside, tried to rally, and then the shorts pushed you back down, and we have that Gravestone Doji, which quite often means that an upward move is ending and you're about to go to the downside, hence the name Gravestone. A lot of people look at candlesticks and put weight in dojis, so I thought I would share that with you. The next question would be, of course, well, are we going to stop there? Is that the end of it? Or do we bounce higher? And here are the other fib levels that we've showed you. We could bounce back up to the 50% fib level, or even all the way up to the 61.8% fib level, filling this gap that occurred back on the 9th and 10th of March. That scenario would work well, and then we could still have a downward move from there. 61.8% fib corrective move with this, the velocity of this move and volatility of this downward move would not be out of the question at all. So that could easily occur. Let's look at some longer term charts. Looking at the weekly chart, here we had the wave 5 moving to the upside. In fact, the wave 5 got pretty extended, going all the way up, as you can see, to a 92% extension right at the top of this Elliott wave forecasted level here. So we were getting a bit extended on the wave 5, but right smack into where it was supposed to go, did everything it was supposed to. So what happens when a wave 5 ends? Well, you go back to the previous 4, which not a lot of people wanted to even consider back then, but you know what happened by now. We are right back to that previous 4. So when you have a wave 5 series that completes, and then you move back to the previous 4, what happens then? Well, normally you go into a corrective series at that point in time, and the corrective patterns are flats, zigzags, and triangles. The triangles and the flats are more sideways consolidation, but a zigzag pattern can be directional. So that can still count. It still counts as a corrective pattern, but could be directional in nature. So this could be an A impulse down, bounce back, head lower on the C, maybe we bounce back further. Any of those scenarios could play out and be right within Elliott wave rules. So while we're looking at longer charts, let's go ahead and take a look at a monthly chart. And here's a wave 3. We don't look at the monthly charts very often. And here's this wave 4 sitting here. Now this doesn't say the wave 4 is underway. When the forecasted 4 is here, that means if the wave 4 were to start now, this is your likely target. And then you can see we went boom, boom, right back down to where that wave 4 was already forecasted to go. So we're right near a 50% corrective level. Is that going to be it? Is that going to be the end of it? Well, here as well, we could come all the way down to this 61.8% fib level and still be within the rules. So we could go up to the 61.8% fib level on the weekly chart or the daily chart, or come down to it here on the monthly chart and still be within the rules. And I know you're like, well, you're covering all bases. Well, there are certain periods of time where you're kind of in between patterns and you need to let the patterns play out. To me, that's the beauty of Elliott Wave, is it's dynamic. The markets are dynamic, they're ever changing. You need an indicator to rely on that is dynamic and changes with them, in my opinion. So coming down here actually could coincide with this move down here to the 261.8% fib level. So even though you could make an argument for two scenarios, to the upside or the downside, both of them could work in and make sense with both Elliott Wave and Fibonacci rules, which is interesting. It's not always kind of that much in between like it is right now. Lastly, before we end, let's take a look at the dollar. We had this big move to the upside, which wasn't labeled with a 1, 2, 3, 4, or 5 pattern. So we said that might be an impulse pattern, an A wave to the upside. And let's take a look and see where this corrective move was out of that impulse to the upside. So if that's the A wave, the B comes down, and look at that, we're right around the 60% level, which means the dollar could catch a bid and head back to the upside, or find some support in this area at least, even if we don't have a C wave. If it's not a zigzag, we're right in that 61.8% fib level where the dollar should find some support. So that should kind of be the end of the downward move in the dollar, at least short term. So couple scenarios there to play out, and we'll see which one works out this week. Right now, at the time of this recording, the futures are basically flat. We were down big, we rallied up, we're up about 30, and now we're just up about 15. And with the VIX at 65, that's nothing. So we'll see how the beginning of the week plays out, and I'll be back to report it to you. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.